Hello traders, and welcome back to Trade Like Skills channel. Are you wondering how I'm making all this kind of money each and every day? I'm giving signals, guys, and when I'm taking trades. In this video, I'm sharing the secrets to finding the best entries and exits in Forex trading. Whether you're a beginner or an experienced trader, mastering these key points can drastically improve your trading results. But before we go too far into this video, I would like to introduce you to my free Telegram channel. The only free Telegram channel that I have. This is the free Telegram channel, guys. This is my free Telegram channel, and it's called Skills FX Free Signals, guys. It's my free Telegram channel, and you can also join this channel using my link here in bio, and you can tap on this link and then join, or down I'll leave it in the description down there below so that you can join, guys. And don't forget to subscribe and like and share this video also to your friends so that they can also get this information, guys. And the other thing, guys, I don't ask for any investment, and I don't write to anyone or send any message to anyone first. So guys, be aware of scammers out there who are going to ask you for investment or money to trade for you, guys. We don't do that here. So guys, let's get into what we came to do without further ado, and we start learning. So here I'm going to talk about the secrets of finding the best entries in the market. The first thing that you have to look at is the direction of the market, as I always say or state that. Even if you are coming from the 4-hour time frame and dropping down up to 15 minutes chart or up to 30, of course, you know the top-down analysis. And to those who don't know it, you can check my recent videos. I talked about the top-down analysis. And also, if you don't understand it well, you can join my classes, guys, my mentorship, and learn about that. Now, let's see what I'm talking about now. It's time to look at this. Now, this is gold 15 minutes chart. And these are one of the trades that we've been taking just over recent. And I'm going to explain using those examples on how to find the best entries and exits in the market. So now we know that the market moves in three ways. We're having an uptrend, a downtrend, and also a consolidating market. So what is an uptrending market? We know very well that it's the market that moves, creating higher highs by breaking the structures or creating what we call BOSs, moving higher highs, breaking higher zones. That's an uptrending market, guys. An uptrending market looks like that. It's breaking, creating BOSs, breaking higher highs, retesting, breaking, retesting. That's an uptrending market. And then we are having also the one called a downtrending market. It's the market that is breaking lower lows, creating BOSs to the lower side, and then moving downwards. That's a downtrending market. And then what is a consolidating market? A consolidating market is the market that is doing this. The market that is neither breaking higher highs nor breaking lower lows. It's just having equal zones. So the market is going nowhere. So that's a consolidating market, guys. Now, after understanding that the market moves in those ways, what do we do with the market in an uptrend? The first thing we do with the market in an uptrend, we only buy in the market that is in an uptrend. And the other thing that we do with the market that is in a downtrend, we only sell in a downtrending market. So for the consolidating market, most of people who have been learning price action and they don't know how to trade liquidity, of course, you need to get to my classes, guys. You need to get to my classes. So there is a way we trade the market that is consolidating by sweeping liquidity and by hunting for liquidity. Most of the times, that's how I take trades with a consolidating market. So more you have to learn them in my classes, guys. Now, let's look at the market. Now, we are having the real picture of the market that has been in an uptrend, breaking, going to the higher zones. Are you seeing this? This market was creating BOSs by breaking to the higher zones. Of course, how the market looks in the chart is not how it's going to be looking in your textbooks. Are we together? That's why you have to learn from the charts, not those lines. Now, look at this market. The market is breaking, going higher highs, and creating BOSs. It's in an uptrend. Are we together? Now, when the market is in an uptrend, we only buy. That's what I said. Of course, you wait for the market to retest into the zone that you were waiting for, or a POI zone, and then you take your buy entry, right? Now, when the market does that, it's breaking to the higher highs. When the market reached here, it broke, of course, this last high, and then broke this low. So the market is trying to show that I'm changing the direction of where I'm going. What confirmed that? When the market retested back and failed to move and break this higher high that was left. Of course, here was external liquidity or buy side liquidity that is left behind that could be taken by this move from here. But this move failed, and also this move was broken by this move. Now, what do we realize now? The market is changing its sentiment. It's changing its direction to where it's heading to. So what do we have to do with that market that is changing the sentiment or the direction of where it's heading to? The first thing we have to do is to follow the market direction. Now, if you follow the market direction, of course, you will go with the market. It's like standing in the road waiting for a taxi, and then you stand in the mid of the road. What will they do? They will knock you out. But if you stand on the side and you move with the taxi of where you're going, of course, the taxi will take you. As long as you're on the right-hand side of where the taxi is heading to. Now, look at this. When the market broke here, it left imbalance and was showing us that it's breaking, going lower lows. Now, as someone who is skilled and waiting for the market to come to their zones, we shall wait for the market to come to our entry zone. Of course, the entry zone will be the order block that is near that zone. Me, I take only order blocks after the imbalances. I don't trade fair value gaps, as in taking fair value gap entries. For example, you can take a breaker block here, but I don't believe in that because sometimes the market might disappoint you and then you lose your money. So what do I do is to wait for the market to come into my zone, and then I take my sell entry because we only take sell entries in a downtrending market. So that's the first rule. Now the market had to move like this, tapped into our zone. After tapping into the zone, I think you see how the market started reacting. Now, what is the best entry and what is the best exit? Whenever people take entries, we are having three types of entries here now. We are having, of course, in the three types of entries, we are having also the aggressive entries and also confirmed or confirmation entries. Now, also in those confirmed or confirmation entries are the broken down entries that people have to wait for the lower time frame to show the confirmation and then enter. And others will take aggressive entries as long as the market is in their zones. Now look at this. According to the size of the order block might be huge. Let me see. The order block might be huge for someone to put a stop loss somewhere. Now look at this. Let me show you this here. There is an entry at this tip here. Now, if someone is taking an entry from here, you will risk a lot of money in order to make profits. Sorry. Now, what if someone waits for the market to come in between here? They will risk little. I think that they'll risk little in order to make a lot. And someone might say, I'm waiting from here. And then you risk little, but this one is a high risk entry. Why? Because the market might come to sweep liquidity and then moves. Are we together? After sweeping liquidity or after taking you out, after hitting your stop loss, the market might move to a direction that you're waiting for it. So most of my trades that I take will be at the tip here. Of course, it will be at the tip here, but it will depend on where the market I'm seeing the liquidity from. So I might minimize my stop loss to be somewhere like this according to what I'm seeing. All together. And I might also take trades according to where the market is coming to and according to the liquidity that I'm seeing somewhere, anywhere here. But here, because this zone, all of it, and also adding this candlestick, it is also becoming an order block. So this order block is a huge zone. It's a huge zone. So the market might tap only on this zone and then drop. Anything can happen. The market might come, sweep liquidity inside here, or from this order block, above this order block, above this candlestick, and then drop altogether. So anything can happen in the market, guys. So why can I take these two types of trades? The first reason is because of the order block that I'm having in my zone. So I might take this zone as my entry. Why? Because of this order block. And if the order block is only having this zone and not this candle, it's not there, there is imbalance, only the next candle is imbalance, of course I'll only target the in-between zone. Are we together? So if you want to understand that more, guys, check and get into my classes, guys, and learn about these things. So now when the market tapped here, I think you can see respected the zone. And now what is the best exit zone? The best exit zone is the recent low if we are in a downtrending market. Never target bigger zones or other zones unless you know what you're doing, unless that's the system that you're using, guys. These things that they tell you that 1 to 5, 1 to 6, man, fuck the shit. That's not going to work for you guys. The only thing you have to do is to target the recent low, the recent high. And whenever you're targeting the recent low, of course, you have to also be taking partials. Why? Because the market changes each and every moment. I think you can see this move had created an order block here and had left another order block here. So anything can happen. The market can change and the market can reverse. Are we together? Why? Because the market might come, tap into this order block and continues high. The market might come, sweeps this liquidity, taps into this order block and continues high. All that can happen, guys. All that can happen. But now the market only decided to tap here, and we are strongly knowing that the market is dropping. And the other thing, we are having all the confirmation that are needed. And also the other thing is that we are taking partials here, and we have taken partials, and then we set BE for another for our remaining positions or our remaining entries. Now I think you can see what happens here. Market sweeps liquidity, tries to move. I think you see sweeps liquidity, taps into this order block, the newly formed order block before market moved to this zone. And then I think you see what is happening. The market is trying to move high so that it can go and break the higher zone. But since the market is dropping, I think you can see now, the market tried to move and break, but it couldn't. Your BE is here. You are just sitting and waiting for the market. Your partials are taken. Already you are in profits, and then you are only targeting this recent low, which is 220 pips now. And now the market gives you all your profits. You see how we take those entries? Never target bigger entries because you think that that's where the market is going, and only trade according to your system. Only trade according to your system of where the market is heading. Now, let me show you another example, guys. Let me show you another example. Yes, now guys, this is another example for an uptrending market now. The other one was for a downtrending market, but this one is for an uptrending market. I think you can see well that this market had created change of character here, and it has started moving, going higher highs. Now, what happens here? The market is leaving each and every step behind that we know that is going to work for us. And when the market has left imbalance behind, we know that the market has broken higher highs, this is another example now on an uptrending market. Now we were on a downtrending market, but this one is an uptrending market. So we know very well that in an uptrending market, we only take buy entries, guys. We only take buy entries, and we only look at where the market is going firstly as a direction. So now we know that the market is breaking, going higher highs, and it's giving us all the information that we need. We only have to follow the information that the market is giving to us. Now what happens here is that when the market was breaking to the higher highs, it left what we call inefficiency or fair value gap, as someone call it, others call it imbalance. Now after leaving the imbalance or inefficiency behind, it's creating new liquidity that is formed inside. Now the market is breaking to the higher highs, creating BOSs again, and we're having liquidity above here that is being left, that is not yet taken, and we know very well that now the market is moving higher highs. So what are we looking at? To sweep the liquidity and then to take the entries. So we are looking at the entries that we are supposed to be taking in this kind of market. Of course, our entry will be here on this tip or in between this market. Now I want you to look at the difference between the other trade that we took and also this one. Let's play this out and we see, guys. Good. This is what I wanted you to look at now. Do you see if we're having a single candle and the next candle to it is the imbalance candle? Of course, the market will come up to the mid of the zone, and then you take your entries from the mid. Of course, your market or your entries will be taking little. I think you can see you can be risking little amount in order to make bigger amount of profits. You're risking too little to make bigger amounts in profits. Of course, you have to sweep that liquidity above, and then we keep on moving. Now let's see what happens in the market. Boom, market hits take profit. I think you can see 200 pips above, and now we're in take profits, guys. So guys, I told you if you want to check my Telegram channel, free Telegram channel is here. You can join and also meet your friends here. And also if you want to join my classes and VIPs, same, you can also contact me here and we can talk. I think you can see there is WhatsApp, there is Telegram, and you can talk to me, guys. And how do you reach to this channel? Is by checking into my bio. There is a link. You tap on the link and then you join my free Telegram channel. You can also check, I'm leaving the link in the description down below, and then you can also check and then you join my free Telegram channel, guys. Ciao. Let me meet you in more other videos that you will be learning about these things, guys. And if you want to join my classes, guys, we can talk. I can give you a discount, and you learn, guys. You learn. You get the best strategy, guys. You learn the best way of trading. Simplify everything, guys. All right. Don't forget to subscribe. Tap the like button, and also share this video so that more videos that are yet to come, your friends and you also can't miss them. All right, guys. Ciao. Let's meet in another video soon, guys.